members. Welcome to your March 16th trade alert. We're going to go through the full trade alert in detail, go over some critical events that happened this weekend from the Fed and its quantitative easing schedule, and then I'll open up for question and answer. So we've been watching this chart right here play out where the SPY and the TLT are crossing. SPY is your US S&P 500 top ETF in the world by far, with the most assets under management, really the key to America's equity market. And then the TLT is the 30-year US Treasury, which is probably the last bond in the market still standing with a decent yield and room to appreciate from here. So the big news yesterday was that the Fed cut rates just above zero and essentially came in with a TLT put. In fact, that's that they're going to be making daily purchases of treasuries across the entire spectrum of different products they offer. And this is really a sweetheart deal for primary dealers who own the most US treasuries. This rate cut really signals that treasury yields should drop, the value of bonds will appreciate, and the Fed's going to sit there and slowly vacuum those treasuries off to anyone who needs to get out, take a profit, and presumably help support the US stock markets. Really the deal in place here between the banks, the bond market, the government, the central bank, and how we're going to slow down this crash. Now, slow down is the key word, not stop. So a lot of people think rate cuts should make the stock market go up, but really it incentivizes the investment into bonds. So people buying this crash really have a very long-term outlook. They're probably sitting on massive positions that they do need to protect. So I think we are seeing a coordinated effort to try to slow down the sell-off in the US equities. Okay, so that's just the big picture view. We've seen these are now crossing with TLT in the bottom and the SPY up top. Let's review the trade alert. Stay in cash. This is relative to your equities position. Now we have two products, basically the basic, where we trade Monday, Wednesday, Friday, and the pro. And so today's information is related to basic members and not pro members. If you're a pro member, you own shares in TLT and GDX, and that has nothing to do with today's trade alert recommendation. Ryan, we're still getting some noise. Okay. So the headline is stay in cash. And again, that's your cash set aside to buy equities. We're looking at healthcare, e-commerce, ETFs. Once I do think we've hit the bottom, which is probably 30 to 90 days before I'd even consider us being near a bottom. And also we'll talk about our strategy to get back into equities eventually. Right now, if you're in our basic program, we're just putting small bets into the option market that the government's going to have to raise tremendous amounts of capital. And to do so, they'll have to incentivize investment into US treasuries. And this will pull resources from the private sector. So stocks are going to be hurting as long as the government has to bail everyone out. Okay, so hold all TLT, GLD calls. We're up a little bit on our TLT positions, except for one. And we're down on our GLD calls. So again, I did reevaluate that last Tuesday. I'm not ready to sell that position as we do have almost a month of time on those two call options. But I do now firmly believe the biggest opportunity for the next probably 12 months will be laser focused into the 30-year treasury. And we'll take a look at why. But that's the big picture. And the rate cut is exactly what we wanted to see. And to have the liquidity added on top of that with quantitative easing makes this really the safest way to generate return with low volatility. And so that's really our strategy going into March and April. Okay, so step one, don't hold any equities. We're waiting for the crash to go far further. We've been calling for this crash way back in late January. And so here we are. And I believe we're just at the tip of the iceberg. We'll soon probably have lockdowns heating up throughout the country and potentially even a nationwide lockdown. Um, Last week, we were starting to see some cases pop up in Florida from one of my inside contacts. Today, he did call and it is exploding in cases. So I'm afraid the worst is not anywhere near over for America. Okay, now, if you have previous positions, we're on hold. So we're first position to exit will be on 3-20. That's this Friday. The next position we can hold all the way through 327. And it's really going to be in the US government's best interest to just slowly as possible allow the treasury products to appreciate so they can start ramping up the issuance because they are going to need to borrow, by my account, trillions of dollars to offset all the costs that are coming our way to bail out consumers, small business, oil, airliners, you name it. Plus, the healthcare is going to need itself probably trillions of dollars over the next year or two to deal with this crisis. So if you're new, I'm not recommending you go back and buy these past trades. They are up substantially, all except for one. And I do not recommend getting those GLD calls at this point in time. So the only trade alert you should follow today is this trade, and it's per 30,000 that you wish to follow our program with, which again, if you're in our pro membership, this would only be 40% of your portfolio. Then we're recommending that you pick up one June 19th, 160 TLT call. So I always take the asking price. If you're a little bit better of a trader, you could go for a mid price with a limit order. And if you don't get filled within 5 minutes, I'd cancel that order and increase it maybe 5 cents until you do get filled. Now, again, I'm happy that it did not just pop up immediately this morning from the rate cuts. I do believe that the primary dealers will be just slowly selling these to help reduce the crash. But in general, I think the stock market will go down for a considerable longer period of time, and that we'll see the treasury market slowly but surely appreciate, which is perfect for these near the money options that we're purchasing. So again, today's trade alert is per $30,000 in cash for the equities market that's on hold. We're endorsing the purchase of one contract at the 160 call option, and that's to buy to open. Let's take a look at our returns. Our basic membership is down a little bit. In last Monday, we were up considerably when the TLT popped to 180. And during that period, we did see a lot of people get blown out from being short the oil market, or rather being selling puts. So being overly extended long the oil and stock market. Those companies had tremendous losses. Ray Dalio's flagship fund lost 20%. So a lot of people had to just sell everything last week. And I do suspect that we may still have some vulnerabilities of people who are in a position where they're not just losing 100% of their capital. They could be down 2, 3, 4, 500% and hoping for some bounces to get out and liquidate. And so we're talking about pretty large banks that could be in this situation. So we're down a little bit, but again, I'm highly confident that this will pop back up now that we got the rate cuts and quantitative easing in the books. Our pro membership is up 1.34% currently. And again, we're perfectly positioned for this slow, gradual rise in the TLT. In the pro membership, not only do you own the underlying asset, you also have one extra TLT call option that's much more aggressive than our basic members. Plus, you have all the same trades that we've been slowly building up upon, which again are listed right here. So no change for anyone who's been following the program. Hold all positions and simply add today's new trade. Our buy and hold portfolios a flat for the year. And again, it's currently has three per $7,500. It has 3,000 in cash on standby to buy equities. And then it has 20 shares of the TLT, 20 shares of GDX, and 10 shares of Yang. So right now, Yang's performing well, GDX is not, and TLT's doing well for this portfolio. The cash position is on the side. And once again, once the time comes, rather than buying the S&P 500, which I do believe will have a lot of industries contained in it that will be on life support for the next year, we're going to focus on the industries that should benefit from all the government spending and this crisis, which I believe will be healthcare, biotech, medical devices, and e-commerce. So we have 4 ETFs ready to go once we see this crash really get much lower. I think we're barely 1/3 of the way, unfortunately. So that's a review of today's trade alert. Let's look at this. So the Fed cut rates to 0, another emergency cut. The last time they did this was on March 3rd with a 50 basis point cut. And by March 9th, we saw the yield. Let's zoom in on this. So on March 3rd, right here, we were sitting at a yield of 1.64 in the 30-year, and they cut by 50 basis points on that date. By March 9th, the yield dropped to 0.99, and we saw the TLT rise to 180. So they just cut by 100 basis points nearly today. And so I do suspect that we will see this appreciate in the coming days. Now, the other thing they came in with was quantitative easing for treasuries, which they have this following schedule up. And we can see the current schedule. So on the 16th, we can see the current schedule. They're purchasing tips and treasury coupons. And as we go throughout the week, they're purchasing different aspects of the treasury curve. All in all, they've committed to at least $800 billion in purchases and essentially said they'll throw whatever it takes at this. So that's very good news for our investment because that means the Fed is actively protecting the core asset class we're investing in. They've cut rates to signal that yields will be allowed to go lower. And probably the next thing we'll see is a push into negative yields. So here's the yield curve. Which we can see our product is way up here, and the recent rate cut did push these lower. Again, I do suspect as time continues and the stocks continue to be weak, that we'll see the yield curve go into negative territory, and this can drag far below where we recently were. So the recent snap was to 1% yield on the 30-year. And I think that's going to go dramatically lower. So this is, again, a long-term play. The bottom line is, as long as the U.S. government has to bail out consumers, small business, oil, airline, you name it, everyone, as well as invest heavily into healthcare, biotech, and medical supplies, that's going to have to drain resources from our economy. And those resources can't come out of thin air. So as you can see, the stock market is taking the hit, and they are incentivizing investments into bonds. So the bonds will fuel the government, who can then go in and try to fix the underlying problem that we're suffering from. Okay, that is a good review of the trade, the recommendation, and our strategy. Let's go ahead and open up for Q&A now. We got 71 live. That's tremendous. Way to go, everybody, for joining us. And let me pop up the chat box. Oh, let's pull. Okay, so one more bad piece of news, unfortunately. So Singapore a week ago was at 120 cases. They have temperature of 80 to 100 at all times. The premier healthcare of the world, just premier everything really. Plus they have that hot temperature. So we're hoping that they could really keep the caseloads low and remain low in Singapore. And while it's not just exploding, it has nearly doubled week over week. So that's obviously not a good sign. So the hope that the heat of the summer will kill this spread of this virus is really not realistic. Also, this is really the key thing to watch. This is a log scale, so it goes 10, 100, 1,000, 10,000, 100,000. And as long as the log scale is going up at all with cases outside of China, then this is growing exponentially. And as long as this is growing exponentially, our economies are going to be forced to go into lockdowns. And so Goldman Sachs just came out with expected negative 5% US GDP. The entire world's going to be printing negative GDP for several quarters. So that's likely to drive interest rates into negative territory and make what we thought the potential high for the TLT look like slim pickings. This could potentially push the TLT well above 240 and potentially above 300, depending on just how low these yields get driven. But again, we do want to see the government start passing some huge fiscal spending to stimulate the economy. And we do want to see that they start ramping up, especially the bond offerings. So until they're really doubling, quadrupling the auction size, it's really in the best interest to not push the rush into lowering yields immediately, because again, they want to incentivize the investment into lending money to the government to fix this crisis that's just getting worse by the minute. And so first they got to get that all passed through Congress. So that's what I see coming down the pipeline. Let's go ahead and do Q&A. Trying to find my chat.
So Jason, you had mentioned riding the TLT until the Fed rate got to zero. You obviously feel like there's more to go on the TLT then.
Yeah, so remember, they did the rate cuts on the 3rd, and we hit the 180 TLT on the 9th. Yeah, I see this position paying off for 12 months minimum.
Great, thank you.
Yep. And I can't seem to get my chat box to pop up here. Okay, let's go ahead and do Tony L. Hey, Tony, how's it going?
Hey, and Jason, just some context too. Tony sent you an email in regards to TLT position he was assigned to.
Oh, on your put, right? So did you get shares or what happened, Tony?
We might have to come back to him.
Okay. I did get my chat box working, so let me pull that up. Okay, Melvis says, how will the TLT, probably longer than 12 months, Malvis, as long as the government has to bail out private sector, the Fed's going to have to incentivize investment into bonds. And so I believe it'll take no less than 2 years to really solve the crisis. So 12 months is probably short. Steve, which put, are you talking about the one that expired on Friday? Okay, what happened to you guys on that position? Did they just give you the value of it? Did you get assigned into shares? I had sold mine on Friday, so I apologize for not better communicating that. Okay, that's the same I did, Steve. Not for a lot, but for a little bit.
Yeah, and so Jay, Tony's question was he did get assigned. So just kind of like next steps from there.
Okay, so keep your position at no more than 40%, Tony. But, you know, you made a little money on it, so that's good.
a lot of money with Tony's account size.
Yeah, a lot of money. Let's do Scotty.
All
And then
right, I
I
found
got,
the unmute button.
hey,
Jason
Scotty,
D,
how's it going?
hello. Very good, thank you. I do have an extra TLT position. I think that's boot camp. I just want to make sure. It's got a
That's
2021 expiration.
the pro. Yeah, that's the pro.
Okay, all right, so that one's
We're
legit.
going to be riding the TLT for a long time, guys. A long time. Probably at a minimum 12 months. But unfortunately, all the doctors, virologists I talk to, this looks really grim. I mean, this is going to be, we're praying for a vaccine. That's really the only solution. The whole hope for summer to fix this is really out of the question. So nothing short of a vaccine is going to cause the economic disruptions to fade away. And we're just at the tip of the iceberg of having to make precautionary measures to slow down the spread. Gary says, could you go ahead, Scott? Let me finish with Scott here. So yeah, we do have that position in pro. That was an aggressive one with a much longer duration.
Yeah.
And,
Okay, good.
And yeah.
Okay, second question. I owe you big time for what you've saved me my 401k because I followed your sentiment and kind of mirroring what I'm doing there. What I've saved in 401k has saved me many multiples of my membership. So thank
Very
you.
good. Very good.
Hey, there is a bond option. So I know this is not exactly part of the plan, but if I have a bond option, would you offer a recommendation to
Yeah, I like
remove some of it there?
Yeah, so we don't want corporate bonds. We only want US Treasury bonds, and really we want the longer spectrum. So 10-year, 20-year, 30-year are all attractive. Now, I don't, they show this 20-year here, but as far as I know, they haven't even started selling the 20-year. But yeah, it's not corporate bonds that you want. Really, it's US Treasury 30-year bond. Find that product. I wouldn't have more than 40% of my total assets in anything for that matter. But that's what I currently endorse is that 30-year US Treasury. It's got a very attractive yield compared to all the treasuries. And we got the Fed, indicating that they're going to go into a period of rate cuts and also vacuum up any selling. So this should be a very low volatile, very rewarding trade for quite some time. And again, the basic picture is if the government, if your economy has a problem that's so massive that the private sector can't solve it on its own, then the government must intervene to keep the labor market alive. And so they have to draw resources from somewhere. And so we talk about printing money. Well, that doesn't really increase economic output now, does it? So we're pulling resources out of the private sector and we're putting it into the government so that they can reallocate these resources where they need to be. And that's going to be just trying to keep a lot of industries on life support, which is why I'm not going to jump into the S&P 500 immediately. That's why I like those, the healthcare, biotech, medical device, and e-commerce ETF. We have 4 of them that soon as enough money has been raised in the government that they can actually start solving some of the crises that are just spreading like wildfire in all aspects of the economy and just getting started, guys. That's when we want to start looking at getting into some equity exposure.
Okay. Well, thanks for describing that. There are a couple of funds in there, and so I know what to look for. U.S. Treasury, longer term, not corporate for sure.
Yep.
Yeah, so the other duration
Great
will
question,
be okay,
Scotty.
but the other duration will be good. But you can see, look, these ones are already near zero on the shorter end of the treasury market. So really the big money, so 30 years, basically 30 times leverage compared to a 1 year. Plus it has way farther to fall. So if we get a move just like we had here, that's just absolutely crazy return for the way we're positioned right now. And we've got a lot of time on all these options.
Okay. Hey, the other one I had for you, it was on the prior graph, but you're showing the exponential, the logarithmic growth of the yeah, there was a mainland right there. It's the left legend button, mainland China. Does that concern you at all? That well,
I
this
believe
this this is worded roughly. Does it concern you that it's slowing? You know what I mean?
I ignored the date. I believe that China and Russia have coordinated an attack. So think about phase two would cripple China. They had no intentions of phase two. So I'll save all the conspiracy for our program. If you really want to know what
Yeah.
I really think, that's for Thursdays. I don't want to scare new people coming in. The new
Okay.
people coming in, their mentality is really just at this point, hey, can you make me some money? I don't know what the hell's going on. This is a lot to comprehend. What the hell's a bond? How does that go up in value if yields go down? But yeah, I think the key metric to focus on is, don't trust the Chinese, is all I'll say in this webinar. Other locations. And, we're trading US products.
Government too. Let me preface that a little bit.
The Communist Party. Yeah, don't trust the
There
Communist
you go.
Party.
Yeah.
But really, we're not trading. Well, first of all, I don't believe China's data at all. But second, really, it's the U.S. economy that we're trading with our portfolio.
Right.
So it doesn't
Yeah.
matter. Even if China has solved the problem with their government structure is far superior to deal with something of this nature, at least so far. In their culture, those guys are all wearing masks. In fact, I don't know if it was in China or North Korea, but I have videos. They were literally hanging people who wouldn't wear their masks all over the place. So, people got the clue pretty quick. Hey, wear a mask. They're essentially throwing you in a jail you never come out of if you broke your quarantine. So their ability to control the public is far greater than America's. So it's quite interesting to watch Americans slowly realize this is something to be concerned about.
Good. Thank you, guys.
You're welcome.
Yep.
Let me
Great
get
question,
a quick
Scotty.
one from Gary in the chat here. Okay, so Gary has a few questions. Let me get the first one. Could you please tell me the date of the alert where you recommend to buy to open the call that expires on 409? Yep, so I'll go to the track record link and SPY tab. And the 409 was issued on 3/6.
Thank you. I can't find it anywhere.
Nope. So my apologies. That was the gold trade.
Yeah.
So on the TLT, you should have a 320. I'll fix the trade alert. Gary always catches me with every mistake. Good job, Gary.
Glad to help.
Hey, you're killer. I'm glad we got you. So we have a 320, 327, a 4.3. Now during this next 2 weeks, that's when the TLT had shot up to 180. So yeah, I know. We told folks if you had bills to pay, take some profits. Otherwise, I was holding. And it was the right call in that we predicted more downturn in the stock market. What I didn't predict is that people like Ray Dalio and a ton of people just went bankrupt and had to sell everything. So we could have, potentially sold that and got back in and made a little extra money. In my track record, I did not. I know some of you guys took profits and you're building back in. But the bottom line is, I think we're going way above 180, and this is a long-term play. So these two trades are really just sucking, these two right here. And after really evaluating what has to happen for America to survive, I get it. We have to push the central banks, the big bankers, they really have to coordinate and force investors into the bond market so that governments, not just the United States, but worldwide, can raise capital to fund this problem. So even though we have massive QE, we got rate cuts going to zero, everybody's devaluing their currency, gold should be flying high. Well, two things. One, people are going bankrupt, not just losing 100%, they're losing 2, 3, 4, 500% from underwriting put options on oil, which is, I haven't checked it today, but I believe it's in even more trouble. So our game plan for the next year or two, will, with the call options in the basic program, if the TLT is cheap, look for me to put some bets on the call option market there. If the TLT is expensive, which I think it will be in the near future, probably within 30 days or less, then we will rotate into some longer term gold call options. So we'll be rotating back and forth between those two until we finally get to the point where we can invest in healthcare, biotech, medical supplies. So really the signal for me to buy those is I want to see, $8 billion packages is bullshit. That's not going to fix anything. We need to see massive, massive fiscal plans being approved. And that'll probably be a good signal of when to buy those 4 ETFs. So right now, the primary dealers have a sweetheart deal. They've been buying these treasuries. They just cut the rates. The Fed's slowly vacuuming these treasuries off of everybody's hands so they can sell those for a profit. And it's not to stop the stock crash. It's to allow the primary dealers to sell some treasuries without collapsing our bond market and to slow down the stock crash. That's really their goal here. So this is all the positions we have open on TLT right here, Gary. So good catch.
Okay.
And as usual, you're on top of it.
Well, I wasn't trying to catch at anything. It's just that if I missed it, I wanted to find out how and why I missed it.
No, good question. And you're correct. Okay, let's see. Mike B, I just opened a brokerage account, cannot do options trading. So I would, if Mike B, can somebody look up what program, is he in the pro or is he in the basic? Buy and hold. Do you know which program you're in, Mike B? And then I can help address that question better. Alan says, taking theta decay in mind, how long to hold calls before closing? Yeah, so I think there's going to be some triggers that will cause us to close, not based on the decay of the option value. I'm probably going to be ready to unload almost everything when we get to this. I think there's going to be a mental roadblock for everybody because everybody saw us hit that 180 and then very few took profits. So I think everybody and their mom's going to want to take profits at that level again. And then we're going to get a pullback and then go way, way lower yield. So I'll be looking to pull out somewhere between, somewhere close to the 1% yield mark, just for a quick profit. Play it safe. Book. If we get there, we're going to be looking at something like a 20% return for March, or whenever we do get there. We'll start pulling those off in mass and look for another retracement to get back into this position. Be what I'm mostly looking at for that one.
Very nice, Jason. I love it, bud. Hey, and Mike B is on a free trial. So
Okay.
I guess really depends on capital and a couple other factors.
Okay, so Mike, let me just go over that. Yeah, Steve, I think it could go above 330, but which I know is nuts. Which means the stock's going to go far lower than people. Yeah, it's absolutely crazy.
Nice, Steven. Great question, bud. Great question.
Okay, Mike B says, I'm hanging with you. Yeah, all good. Steve's been following me for how long, Steve? Long time. He mostly comes in when there's volatility. It's when we see Steve pop in to say hi. Since I was 6. Mike B says, okay, so he doesn't have options. You're looking at the basic program. Well, the basic program's in cash and it's buying TLT call options. If you're doing the buy and hold, which is included with the basic, you would have 40% allocation in TLT, 10% allocation in GDX. And GDX is at a super bargain today, considering oil's cheap, spot gold's high, and we're printing more money than Donald Duck could possibly even dream of in his wildest dream. I like gold. Now, are we going to be disincentivized to make the right bet? They're going to try to make it look like you should buy stocks all the way to the bottom. Karen says just announced cyber attack on HHS, disinformation campaign about closing US out there is all false. Okay, good to know. Yeah, it really looks like we're entering some sort of cold secret war between China and Russia. We see Russia trying to crash oil market right when we're weak. We see China, just totally blatantly lying and using propaganda. Now they're saying we caused all this. Okay, Randy says, why aren't we rich yet? I want that drop in the yield immediately. So remember, they did the 50-point cut on March 3rd when we're at 1.64, and it took till the 9th to get to 0.9. And the other thing I want you to keep in mind is, look, the reason they need to make the yields drop over time is to fund. This is going to have to the deficit is going to get out of control. So the more money the government needs to borrow, the only way they make that happen is to incentivize bond investments. And there's two ways: either your yield's attractive. Let's look at when yields were attractive. So for most of the time, especially when really we had much healthier economy than we do now, not a debt-based economy. Give this a second to load. Let's look at the 30-year yield coming out of the 80s after we jacked up interest rates to ultra high rates. Okay, it starts in the 90s, but still, who would turn down an 8% 30-year bond in the 90s? I mean, the yield on that is sexy. Plus, if you did think that there's trouble ahead in stocks, any rate cuts would drive that bond price up. That is a killer deal. Okay. Today, and you can just see as we go through time, to keep the bubble rising, the whole secret to this whole madness has been to just drop yields. So the lower the yield goes, the bigger they can grow the bond bubble, which in turn allows them to continue growing that stock bubble. And so most people would presume that 0 would be the lowest this could go, and then everything comes falling apart. I'm going to argue that that's wrong and that we can go to negative rates because of the amount of damage that this virus is causing to the economy, which is going to be negative GDP worldwide for considerable amounts of time. Okay, so let's get to current day. You can see it's just slowly going down. There's little bumps, sure, but I guarantee you, this is trading is risky. You can lose your entire investment, not your financial advisor. I believe this will go way below 0.99. That's what got us to 180 on the TLT just last week. So again, we want to see, here's the dominoes. The fiscal plans have to be, first, America has to get into such distraught that Congress will pass anything you throw at them. 1, 2, the gravity of this situation is not $8 billion. That's what they passed so far. That's a joke. That'll probably make us enough N95 masks for the next 6 months. It's nowhere near the budget we need to deal with this crisis. So these auctions are going to start massively getting larger, which is going to draw more and more resources out of the economy. And again, you have limited resources in your economy, so it's going to hurt certain sectors, which I believe will primarily be the most inflated sector, which is stocks. So they want to just slowly as possible push these yields lower, incentivize bond investment. The quantitative easing plan right here is basically your PAL put for bonds. And this allows the primary dealers, who are really the ones who understand all this, and our audience, not many people understand the bond market. And so that allows these primary dealers to slowly sell these to buy stocks to slow down the crash. And we're just getting started. So yeah, it took the rate cuts don't immediately force the yield lower, and which is good. It gives us more time to buy call options and build into our position. Let me get my chat box back up here. Okay, got it. Okay, so Mike B says, so should I buy shares to match your percentages, or are there more risk? Okay, so yeah, I'm not recommending GLD. Let me show you. And also, Mike, anytime I ever tell the audience anything, it's going to be, here's what I'm doing in our model portfolio, because we're not your financial advisor. You have to make all your decisions. What we're doing in our buy and hold strategy, which done, sometimes not being down 20% is really good. Now we were up 10 to 15% in all our portfolios last Monday. We made a call to hold these positions, and TLT pulled back on us. So I think it's going far further. The market did crash last week, but people went not just 100% loss, they went multiple 100% losses, and they had to liquidate everything. So it did put some stress on the treasury market, which is why we now have this QE. So if you wanted to follow my buy and hold model portfolio, it would involve having 3,000, and this is per 7,500. So you've got 110 or so. So you would multiply this by something like 15 times. Let me see. Yeah, it's 14 and a half, 15 times. So we got a lot of cash on the sideline, ready to buy equities. But again, it's going to be healthcare ETF, biotech ETF, medical device ETF, and e-commerce ETF. After the selling has slowed down, probably after the VIX pops above 100, which will be a record. And we also start to see the proper fiscal budgets getting approved, which will then start really showing up in this data right here, which again, we're getting ahead of the curve here. So you would have 40% in cash, 40% in the TLT, 10% in GDX, 5% in Yang, and then another 5% on the sideline to potentially double this position. Now, Yang is essentially attacking FXI. That's your biggest companies that are publicly traded in China. So I do think we'll start to see retaliations against China. Why is Trump saying we're still best buddies with China? Good question. Probably politically, for us to start getting aggressive, we need China to do something that Trump can easily point out, which I believe will be failing to meet the phase 1 trade deal, or not being willing to work on the phase 2 trade deal, which again, I never thought they would sign because it would cripple China's competitive advantage. So yeah, this is your buy and hold strategy. If you get your options going, Mike, if you set up this today, Mike, then you'll be perfectly primed to go into our pro program, which I think you might be better off with. If you do this, then you're set up on our basic program to start. And once you get options, you can start adding in the option trades. I'd only take option trades the day they are issued, though. Randy says, what do you mean Yang is attacking FXI? Yeah, so Yang is an inverse of the FXI. Correct.
Yang is currently trading halted. I wonder what that's about.
I think FXI hit limit down maybe, so that would
okay.
halt the inverse is what I would guess. Let's go ahead and do Sue L. And if you do raise your hand, go ahead and get your microphone unmuted as well. Oh, Ron, you want to? Ron or Pat, go ahead.
Hey,
You answered my question.
yeah, this is Pat. Just a quick question. If we get into a financial war with China, don't they own a bunch of our bonds? What if they actually, what could they do to actually hurt the United States? And what would that mean to our positions?
Yeah, they've been slowly selling their treasuries. So here's what happened. If China lost all of its dollars, it's going to have a hard time importing goods. So that would be their nuclear attack, would be to start aggressively selling bonds. But I don't know if that, they have let go of over $1 trillion, I think 2 trillion in treasuries since the trade war began. So I think the Fed would just buy them all, is essentially what they've come out and said they would do.
Yeah,
Now,
and it's up substantially since then too.
I think China's end game is not to ruin the bond market, which we can artificially control. That's what our central bank can do. They can pretty much do whatever they want to protect the bond market.
Mm.
Their goal, their end game, I believe, is to crash the dollar. So if we get out of control with printing money and buying up bonds, which we're doing, it'll weaken the dollar. So I think that's what China and Russia want, is to end the sovereignty of the dollar, which, they've been talking about for a long time. So no surprise there. But yeah, that's a risk. If all of our enemies were to team up and start selling treasuries really quickly, we could have some volatility. At this point, I don't think the Fed's going to give up on the bond market, because that's how we're going to finance that. We have to finance capital to raise capital to the government to bail out all these different industries. So I think the US will be willing to let the stock market crash, let the dollar crash, and protect its bond market.
Right.
And probably you'll see the US start getting aggressive about shaking up other countries' markets, which will help drive more money into our treasury market.
Okay. And does this also, the other thing that I think I read a while back, maybe 6 months ago, is that Russia was moving to gold. Weren't they moving off of our bonds and into gold maybe 6 months ago?
Yeah. Russia and China have been buying up gold and selling treasuries.
Yep. Okay.
Yep. Pat, phenomenal question. Are you on a trial?
I am on the trial. Yeah, it's my second.
Nice.
Yeah.
Nice. Yeah, that's one of the best questions we've had from a trial member. Great job, Pat.
Right. Yeah. Thanks.
Awesome. And just real quick to clarify, guys, Yang is absolutely not halted. It is up 22%, but it's not halted. So congratulations on all the long holders on that. But yeah, it's not halted. Just wanted to clarify that real quick for you, Randy. Okay. Sorry.
Stop changing price. Do you see it changing price?
Yeah, it's not ultra liquid. But yeah, and it's already up 22%. So
yeah, I think we're going to see retaliation against China pretty soon here. What's funny is Trump's going to be running on all of Bernie Sanders policies, and people are going to love him for it. We're going to have free healthcare, universal income. We got Bernie, Andrew Yang policies coming down the pipeline from the administration to get us out of here. And plus, they're going to probably start rattling up all of our foes, which will help drive money into to U.S. products, which is something America loves to do. Go rattle up all the neighbors and force all the capital to our markets. Let's see, who has a question next? Sue L's had her hand raised for quite some time. Mark, go ahead, Mark.
Okay, yeah. So yesterday I saw a headline that the major banks have stopped their stock buyback programs.
Yeah.
And so I was just thinking, you've talked about how the corporations have been the stock market's biggest buyers over the last year or so, really during this bull run. So the banks are going to stop that, and then the corporations start suddenly announcing the same thing, which to me seems kind of inevitable. Is that going to then potentially be the next trigger for the next big fall?
Yeah, corporate
credit's
done.
Yep.
I might
Great
give you
intuition,
guys,
Mark.
I might give you guys some plays on that, but we're so well positioned for a market crash. Yeah, LQD, HYG is totally frozen. Corporate buybacks are done. The plan here, guys, is let the people who are insiders, who understand the bond market, buy these treasuries, fund the government, slowly let them sell them for a profit to reduce the crash. They're not trying to stop the crash. They're just trying to slow it down, let these banks, they're probably taking turns, they probably literally, think of penny stock promotions. Okay. They're trying to slow down the unwind, pay off all the primary dealers who buy the treasuries, let them just buy this at a loss. The banks don't care. They're going to hold this stuff for decades to come. And they're just going to try to get through this crisis. Tony L., go ahead.
Yeah, our president's going to have a few comments today around 3:30. I know the last time he did that, it seemed like he just waited toward the end of the day and rallied the market. So what is your opinion on that? I guess would be the best way to put it.
I've seen the opposite. So he's slowly, at first I was a little upset with Trump, but I was hoping that they were making plans to deal with the crisis. And you can see now we've got drive-through testing centers, which was smart. Last thing we wanted was people to run to hospitals and infect everyone. That's one. Two, he told the public that he endorses that Apple shut down for a few weeks and that we should have social distancing. So he's slowly changing his tone to America in terms of how to cope with this. And they're slowly letting us know this is a crisis. So I'd expect that each Trump speech will become more and more revolving around the safety of the nation and trying to prevent the spread of the sickness. So yeah, ignore the noise, and stocks are gonna, every time all these people who sell puts have to cover, that's gonna spike the stock market. These banks are sitting there taking profits on the treasuries, and they're turning around and trying to slow down the stock market. We got China. Anytime we have a bid, I believe they're trying to bid it up. And then every time we get a crash, they're trying to sell it down. So the big picture here is the problem that we have is too severe for the private sector to cope with. Period. So the government must intervene. They must raise not billions, trillions of dollars. To do so, they must incentivize investments into treasuries. So that's just as simple as it gets. And it's going to take at least a couple of years to get through this. So I like having half cash, half bonds with a little gold, and put some call options in there. And 3 months down the road, maybe 6 months down the road, we'll be ready to pick up some healthcare, biotech, medical device, and e-commerce stocks. But first, I want to see the fiscal spending budgets approved that are massive.
So at this point with the I'm questioning the TLT part of it, would you scale in, or would you just go back and get back in since I got assigned on that last round?
Which program are you in, the basic or the pro?
Pro.
Yeah, so 40% is a smart allocation.
Okay, so even though I got scaled out, so I'm just curious, should I scale in, once or twice a day or until I get back to my 40%, or would you just go ahead with the whole thing?
I would just go in. I don't think time's on your side with this trade.
And great question, Tony.
Yeah, very
really
good question.
Nice. And Jason, to your credit, bud, you've been saying exactly what you just said since TLT was 120 so,
Yeah.
or lower. So awesome job.
So Tony, I've had to keep this firm stance with lots of market manipulation and everybody, having an absolute shit fit every time the SPY goes up. But I've stuck to my guns, fundamental analysis, and it's, we're positioned very well. So a little patience here, and I think you're going to be very happy. But yeah, the chances of the stock market flatlining here and going back up are none, in my opinion. So I would stay away from equities for quite some time. And again, a lot of the sectors in the S&P 500 will be on life support. You know, a lot of sectors. So there's only a few sectors I think will really benefit from this. Whereas, which is primarily the U.S. bond market. But then who's the government going to fund? Who are they going to hand all that money to? Those private companies are going to do well. James Goodman. Pat, go ahead, Pat.
Yeah, I haven't quite got on this full allocation that you have here. And I'm sitting on a bunch of puts from almost 2 months ago of the SPY. And before I even knew about the SPY, I was on VOO, which is Vanguard's SPY.
Mm-hmm.
And I have like some Apple at 325. Should I be getting, I mean, I bought it so cheap and it expires in like May and June and July. I'm wondering if I should move over into this or just ride that out.
So I think stocks will crash for quite some time.
Okay. All right.
Oh, and Jason, Pat is the referral that came over from Roy Baumberger too.
Yeah.
Hey, Pat.
Oh, cool. Well,
Yeah.
thanks for the referral, Roy. We really appreciate it.
Yeah, I'm going to thank you guys for your great information. Just really insightful. So, and thanks to Roy if he's on the call.
My pleasure, guys. Let's do Karen.
Yeah.
Hey.
Hey, Karen, how's it going?
Hey, you know what's going. I'm sure you've probably repeat this. I'm sure you're going to repeat this, and I apologize. I've just had so much interruption today.
No worries.
On this TLT, you know, of course, it spiked before, went up to 180. You say it's going to get there again. What I've missed, and I'm trying to get myself to understand, is, you know, with all the news that we have happened this weekend, why is it not spiking any further, any faster? And what is your project? Yeah, I mean, I know you say it's going to get there again, but what are we looking at to see that it's going to start to get to that point? And why is this taking so long? Again.
Okay, sure. Yeah, let's take
Or,
a
you
look.
know, however you can wrap it up into.
Let's just look at this. So
Sure,
they
you've
did
probably already said it.
rate cuts artificially push yields lower. So they did the
Right.
first rate cuts on the 3rd, and we hit the pop on the 9th.
Right.
So it's not immediate. That's one. Two, now we got the Fed, we got the TLT put, the PAL put, but not for stocks, for bonds. That's what this is
Right.
right there. So yeah, just I think this rate's going to go way lower than 1.
Okay, so you sort of think this is going to be a little bit of a slower grind versus that, you know, I mean, from the 6th to the 9th, boom, you know, there was such a big drop. You're just thinking now people are expecting this, so it'll be a little bit of a slower.
Well, let's talk about what the goal is. So the goal is the government has to bail out private sector.
Right.
So first they need to obviously borrow more money than they are, which
Mhm.
is what we see here. But before they can borrow more money, they have to get the Senate has to pass the budget. So first they got to make the plan, then they got to get it passed, then the auctions increase. Then that's really when the Fed would want to, you know, that's when America needs this to start working. So, so yeah, I'd suspect this is a great 12 to 24 month play with a nice slow grind.
Okay.
Now, do I wish we had pulled some profits off here? Sure.
Yeah, you better believe it. You know, I keep saying to myself, I smack myself again, and I go, you never get hurt taking a profit.
Yeah.
Oh, well.
So, you know, I told you guys like 10 times that, hey, if you have to pay some bills, take some profits. Otherwise, expect a pullback in the TLT before we go higher. And I've listened to that a few times. I said it like 100 times. Expect a pullback before we go higher.
Yeah, well, it already pulled back. So, all right. Well, thank you. I
But
appreciate
yeah,
that.
here's that yield curve. I bet this goes to negative territory as the economy really, as all the economic data comes through that of how bad this is. I mean, we haven't even, I've still got people going out to the clubs here in Albuquerque.
Bar's been packed.
Yeah.
Oh, I
so-
know. Here too. It's
So
crazy.
they're celebrating. Yeah. So wait till we really lock down. So we're at the tip of the iceberg. We're barely getting started with this big move.
Yeah.
Well, not that this applies to you, but that last ding was a friend of mine who just got out of surgery and it went well. Yay. Hallelujah. For some,
Oh, good.
thank you.
Jerry says, why aren't the CDC? Because they're a bunch of corrupt jerks. No. Yeah.
Bureaucracy.
Yeah. There's definitely some. I don't know. I'm glad they came out with the drive-through testing in my town. I think that's brilliant. They need a lot more of them. So that was a big move. That was a great move. I'm glad. So if they had just rolled out testing right away through America, we would have rushed everybody into hospitals and infected everyone. So that was maybe a good move. So my trust in Trump has gone up. I was not happy with him. I was starting to wonder who are all these folks working under him who are all associated with pharma lobbyists, which is also obviously concerning. But, trying to get to the bottom of the conspiracies, we could do all we want. Big picture, what has to happen? Okay, private sector is hurting. They're hurting so bad that no single bank, not even JP Morgan could bail out the problem we have. So government must intervene. That means they need to raise a lot of money through treasury auctions. To raise money through treasury auctions when the yield is this low, you can't do it based on the yield. So they must incentivize and give forward guidance that people who invest today into the US auctions will be rewarded. And again, it can't be rewarded from a high yield because it's too low. So we need to believe that if we buy and hold these treasuries, that we will show appreciation and that we can sell it in a liquid market. So this is the liquidity. This is the Fed saying, hey, we will ensure that everyone can get out, not at once. They're doing a slow QE daily. Okay, so they're not saying everybody can just exit at once. 1, 2, they did give us the rate cut, which will drag yields lower. Okay, and all the central banks are doing that. So this is a great setup, and it's a blessing that it didn't happen at once because it lets us build more positions. Terry Grapevine.
Yes, sir. Got one question for you. I've got an option that I'm not seeing on your list today. I've got a TLT option for January 15th, 1921.
You're giving away our secret pro trade, Terry. No, that's good.
Blah.
I'm just
I didn't say all of it.
It's okay. It's okay, Terry.
Blah,
okay,
blah,
I
blah, blah,
apologize.
blah, 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 blah. Don't say
Still holding.
Okay. I thought, man, I done messed up again.
No, yeah, it's confusing. I get it. No,
right.
you're doing good. This will be the easiest.
And lashings with a wet noodle.
I'll take the beating.
Okay.
Yeah, Karen's got some frustration she needs to get out anyway. So
Yeah.
Oh, you better believe it.
let's hear from Patel.
Hey,
Great question, Jay.
Thank
if I were to make a position today on TLT, how would you go about starting it? Or is it too late?
Not too late. Nope. So here's your are you on a trial? Are you in a paid program?
I'm not. How do I go about joining one of those programs, actually? That was going to be my next question.
Yeah, let me just review what I always forget to even tell people what we sell. Just all content over here. Okay. Could you tell me if you have more or less than 100,000 to invest?
Less.
Okay. So you're going to be most interested in one of these two options right here. We're at our options page. So we have a buy and hold strategy, which runs 1,000 a year. No option trading. So no option trading. This thing, you'll be lucky if I give you 2 trades a year. So it's a very we're
I
not
was
trying
looking
to
more
touch it.
into options.
Okay, if you want to do the options program, then this program's great. And you'd want the basic program, and you can
Gotcha.
do that with you need 30 grand to follow this program. And your trade today is per 30,000 to buy one of these. Because remember, I'm going to be layering you into these. Timing's so hard. It's a random walk, you know. We can get the big picture right, but you know, who would have guessed Ray Dalio would lose 20%, one of the best
Yeah.
traders of all time, and cause the treasury market to sell off a little last week. Okay, we made the right decision to hold last week because the market crashed, but it crashed so hard, parity traders had to sell off some of their winning position to not go completely under.
Mm-hmm.
So I'm a big advocate of not taking on too much risk and being intelligent about building a position. So if you told me you had 30,000 in cash, I would tell you to buy one. Or if I was to tell myself I had 30,000 in cash, I would buy to open one 619 2020 160 TLT call option. And I got it for $920 today per contract.
Hey, and Jason, I just checked on our option from last Friday. It's already up over 50%.
Nice.
Cool. All right. Thank you.
You're welcome.
Awesome. And thank you for the question, Patel.
And we'll be building into this every Monday, Wednesday, Friday. So I just wouldn't rush it and do more. I wouldn't take more risks than I recommend. I'm pretty good at making sure we're making intelligent risk management decisions. That helps you. Not
All right. Thank you.
Sometimes you get the right trade, you get the timing wrong, you take too much risk, you get blown out before the trade hits.
Yeah.
And Patel, did you get the text message for the trade alert?
Yeah, I got it. Thank you, boss.
Awesome, bud. Okay. Yeah, check
You
your
should
email
you should
inbox.
be seeing the email too in your inbox. Cool.
Malvis says, do I expect the TLT to pull back? I think the TLT is going to slowly grind higher from here. Jose says, what's the expectation for GLD and silver this week? Well, we have call options that are looking for a lot more time premium. So our current so SLV, we have 2 years. So we're not looking at it in that kind of a zoomed in time frame. Let me zoom out. The gold, we have 2 long gold trades, which went against us. Oh, that's buy and hold, sorry. So we have April 9th and April 17th. So that's quite a ways away. So I'm not even concerned about these positions yet. I'll probably hold these until expiration. Big picture is I think gold's going far higher because of quantitative easing, which all the banks are doing. So rate cuts are good for bonds. Quantitative easing is good for gold. So I like both those positions. As far as why is there volatility in gold, I think it's primarily from people having margin calls. So they had to liquidate their entire account. And now they probably owe the broker dealer money. They probably aren't even whole. So that's why we saw everything sell off last week. Plus central banks like to play with gold products when they're trying to incentivize certain investments. So right now, central banks want to get retail buying stocks as their insiders sell them. And they want to just secretly sell the bonds to the banks who are going to bail us all out of this problem. Thanks to the Fed giving them basically free money. But yeah, I think, guys, our allocation is perfect. We're really positioned very well. We got to ignore the noise. The noise is going to be the hardest part during this whole process. But
so Jason, this is Jose. So just to add on that, then do you expect further drops this week because additional crashes in the market means additional margin calls, and any manipulation will keep it dropping? Is it going to drop much more? I just want to understand what level of risk I'm taking because
Gold
yeah,
on gold or on?
yeah, specifically on gold because I went a little bit deeper. I'm a bit of a gold bug, so I went a little bit deeper
Yeah,
than
I
what had
wouldn't
been
ever
recommended.
go. Yeah, so don't. Well, there you go. Here's my recommendation. So I would make sure with the sell off, I would add to get back to 10%. So if you have more than 10%, you're not following the advice for GDX. Yeah. So really it's pretty easy for buy and hold right now. 40% of your money's in TLT, 10% in GDX, and 5% in Yang. That's it. Everything else is cash. And if you read the Tuesday thing, the Tuesday mailer for boot camp, I did a pretty long little expose about why gold bugs are way too early and that I was coming to that conclusion after having given you guys a few call options on gold. So I think there will be nothing that outperforms the 30-year treasury, period, with less volatility, with that low volatility, high return profile than the 30-year treasury for no less than 12 months. Now, can gold potentially outperform? Maybe, but it's going to come at extreme volatility, which we've already seen. So bonds get perfectly priced. That bond issuance gets pushed into the economy. The people who are the recipients of that cash begin spending it. Then it makes its way into causing inflationary pressures, and you get people loading up on gold. So yeah, I would go back to the Tuesday issue, Jose, and I have a whole bunch of stuff saying, hey, gold bugs are too early. So I wouldn't be heavy on gold beyond what I've recommended. Now we have had, did you take the put option?
Yeah, yes, I did.
Okay, good. That put
I
option
get a
is
little
working
protection.
Yeah. So we have the 23 put. So I like GDX. These are great. Wow, it popped back up to 21. It was at 19 earlier. Yeah, I just highly endorse not taking more risk than I do. We have great returns. That's when people get blown out, is they take too much risk. So we've been able to deliver great returns with low volatility. And for our audience, most of you guys don't have new income sources. So if you're young, you got a business or a job and you're making a bunch of money and you're trading a smaller, whatever size account, as long as you have new income, you could take some risk. If you screw up, you can replace that with your income. But if you're getting near retirement, you really shouldn't be taking outlandish risks. You should be looking for the lowest volatility trading opportunities that make the most sense with the macro picture. And so I would say right now, what makes sense is 40% TLT, 10% GDX, a tiny 5% Yang position, and then sit in cash. You can tell that things are breaking at the seams. The opportunity for those of you who have cash will be very handsomely rewarded when the right time approaches. So yeah, I would just stick to that. Now, if you had a 10% GDX position and you saw it drop to 8 because of a sell-off, then refill. I would go back to 10. Now, on the other hand, when GDX starts appreciating, we're going to go above our 10% allocation. Don't shorten it to 10 until I tell you. So that's really, I guess, the caveat there. If I give you a 10% position in GDX and GDX pulls back another 10%, I would endorse buying into that. But when we start to see GDX take off, let it go above that 10% value until I say, hey, it's time to take profits. So that's really the caveat. What do you got? What's your gold exposure, Jose? Is it over 20?
Yeah, it is. It's about 30.
Oh, yeah. Go read the Tuesday play. Go read the Tuesday issue from last week for boot camp.
Yeah.
Read that and then read it again and then read it again. And then realize the powers that be, the big banks, the central banks, they must incentivize bonds to be the best performing asset class. Okay. They own gold, so they can manipulate gold all day. And they can play the bond market, so they can manipulate the bond market. They can control interest rates, and they can buy up as many bonds as they like.
Hey, and Jason, I'm just going to play dummy here for a second. But what happens when the bond market goes upside down?
Well, they're
Gets
not
chaotic.
gonna let the bond market go. Yeah.
Why?
the-
I'm going to play devil's advocate here. Why?
Well, then the government's not funded.
Bingo. So guys, there's no way the U.S. government can let the bond market go, right? They can let the stock market go. They cannot let the bond market go. So many people don't realize that, and it's kind of important to highlight that and just to strike it. Okay. So awesome, Jason. And you have a bunch of new questions that are in the chat box too.
Oh, cool. Let me pull that up.
And awesome, Jose. Thanks for talking about us with that. Appreciate it.
No,
And
thank you guys.
Yeah, bud. And hey, make sure to call me later too, Jose. I think the boot camp trial ended last Friday, I think too. Okay. So I'd be happy to get you upgraded.
Okay. Yeah.
Okay. Craig Bartel says, do we have a put on the core TLT? No, we don't right now. The cost for that put is so expensive that our better bet is to have less exposure. So 40% makes sense. Now, if I did want to, yeah, the puts are just so expensive that it would eat up all our profits. So that's the biggest risk we're taking, is not having that put protection. But I was counting on the Fed cutting rates and then buying treasuries, obviously before it happened. And that did happen Sunday. So that's as good as it gets in terms of having your own government / central bank tell you they're going to protect that market. Sanjan says, what should be the strike rate and expiration for GDX? No, we're not recommending any call options on GDX. So if you're doing the buy and hold, we have 10% of your capital in GDX, 40% TLT, 5% Yang is the current recommendation.
Yeah, and Sanjin, what you may have been referring to is we do on the Pro system have a put on GDX. So maybe that was where it was coming from.
So Torpedo Trader is a good question. When you say for every 30 cash, let me read it. When you say in your alerts, for every $30,000 of cash, does that mean what is left after all trades, or what the total of your account that day, net liquidation, and how about if you're on margin? Still not sure with the allocation for what amount to use. Torpedo, can you tell me what kind of, what kind of account size are you trying to trade with? And do you want to use margin or not? And I can help break it down for you.
Yeah, and if Torpedo, if you can, just unmute your microphone to interact live with us. That's the easiest way to kind of work through a question with that much complexity. Hey, there you go, Torpedo. See, your microphone's unmuted. Go ahead.
Oh, well, I'll do my best. So let's just say you had $30,000 you wanted to follow with our program. You would have placed one of these trades that would have eaten up some of your 30,000. The second trade that came out, we would still assume you had 30. So we're basically saying you have 30,000 in total cash at the starting point, and we're layering you into this position. So I think that would answer that question. Now I did see Michael Seebeck had a question.
Hey, Jason. It's been a little crazy here on the desk as I'm working, but I did get into that position you called out today. I really don't have a question. It's just, of course, it's seeing the beauty of this system and the recommendations play out. And so far, it's pretty exciting, but it's still a nail biting situation that, we're not taking a lot of risk. And these positions are starting to come into play and look profitable. So.
Nice. What are we up on this one? Does anybody know? I see the TLT is up a couple bucks from entry. And I'm glad to see, yeah, it's nerve wracking to watch the United States economy come crashing to a grinding halt and our healthcare system get overran, and to invest in some kind of foreign investment instrument that most people have never even heard of. So I appreciate you having faith and listening and being such a good member.
I bought the June 20 call and I'm up 100 from just a little bit ago.
Nice.
Yeah. And again, when I was doing the free 7-day trial, I took a paper position on the calls that week, and had they been made in the real account, because I did catch that 182 sell point on one of them, but I had a risk-free trade as of a week ago Monday. But all I'm saying is your advice, I could have netted 10 grand in 1 week just on those call positions you called out about 2 weeks ago.
I've got a rumor I just picked up. I can't say the source. I don't know if it's true, that we may be on a nationwide shutdown within 48 hours. Wow.
Yeah. Generals here in Kirtland Air Force Base were preparing for complete containment as of last night.
Mm-hmm.
So typically military's doing that.
Martial law soon to follow.
Yep.
Absolutely.
All of the universities and the schools in this area, I live in Tennessee, and the West Tennessee district has literally closed all the universities and all the schools. They're on spring break, but they're extending their breaks indefinitely. I just got an email from one of the universities that any group gathering over 50 people is now closed. It's canceled. And so
yeah, that's the same in Florida, and I have a place in Middle Tennessee, and it's the same. I think that's pretty much the rule now. Anything over 50, they're just kind of, I think they're being told that's that. So
yep, we're told
pretty
that
much in the same boat.
Do everything over WebEx.
And Michael, what do you do for a living? Just, I think it helps with the context and the color of, where the comments are coming from.
I'm a registered investment advisor with AIG. And
Nice.
And I handle the retirement plans for K through 12 and higher ed. So that's, elementary, middle, and
You're
high
managing
schools.
some pretty serious money, huh?
Yeah, we have multiple millions under management. Unfortunately, the mutual funds that, in large part, they're all correlated, meaning they're correlated to go one way or the other. And they don't have a lot of safety assets, mutual fund type assets. Within the fund, well, within the contract, they don't have. They have cash position, right? But there's not a lot of uncorrelated mutual funds, which is a little frustrating for me. I knew this 2 years ago, but it is what it is. So a lot of folks are just like, we're moving to stable or cash right now.
Yeah. Well, hey, there'll be some good opportunities once we.
But Jason, I saw that little video you put out last night.
Mm-hmm.
Where you're calling out XLV, IBB, IHI, and ONLV or ONLN.
Yep.
And so I think you referenced 30 to 90 days on those, that we'll be looking at those ETFs.
Yeah. So I want to see first we need to get the fiscal, first I got to draft the budget, which needs to be massive. And then we need to see it get passed. And then I think that'll be pretty good timing on the healthcare related ones.
Mm-hmm.
But I still think we got a lot of downside before I'd even. So I want both, way more downside. Plus, let's see the government handing those three sectors billions of dollars, and I think that'll be a good play.
Yeah. How do you feel about the GLD call? That would be the April 20th call.
I like gold. My plan for the Monday, Wednesday, Friday trades, if TLT is relatively cheap, I'm going to put call options into TLT. And if it's expensive, I'll look at GLD calls. Might get more time on the GLD calls next time. So in general, my basic fundamental rules is if we have rate cuts and we need to raise capital at the government level, then they're going to have to incentivize bond investments for primary dealers. So I think that's going to really hog the resources and the attention for quite some time. Gold should do well. We're going to have inflationary pressures. We have QE. So I think we're just getting a little bit of margin calls causing people to sell everything. I think we got central banks manipulating gold to try to force money into bonds.
So we're ahead of where this is going, you feel?
I think we're going to see the best performer in the bonds. I had a pretty large update on Tuesday for the boot camp folks where I kind of said, hey, I think I was too early on the gold. I think gold bugs are way too early. It looks like we have at least a year to 2 years where all the resources are going to be dragged into bonds. But I do think gold's going to have its run. Timing's going to be hard. So yeah, that's where I'm at with gold. The fundamentals for gold get better by the minute, but the prices keep crashing. So that's the noise that we have to look through. So yeah, that's my, if TLT looks relatively cheap, then all attention will be on that. As it starts to hit like 180, as it starts to make a significant run up, then we'll look at, I'll probably start buying a lot more time premium on GLD calls. And any equity holdings, I prefer GDX because those are American Canadian, whereas GLD's HSBC, which I think is a high risk bank.
Nice. And Mike, thank you so much for the context too on the kind of comparisons from the mutual fund to being able to be nimble like we are too. I think that's so many people just don't realize really kind of the core differences.
Yeah.
Awesome.
I'm simply wondering why, since you've got a gentleman on there from AIG, why haven't they learned a lesson from so many times we've been through this? Why don't they some of these 401ks a little bit more flexible? And I understand that the individual client can decide the package, but it's always presented by, one of the companies like yourselves. I'd love to hear your thoughts on that.
Well, they use a lot of index-based products. So they're fixed and variable indexed products. So they have step ups, but they're based on the indexes. And so a lot of things are presented in the way of guaranteed income. So along the way, if you're in your 20s, buy and hold is the kind of the mindset. And then as you get into your early 60s, close to retirement, start looking at income products where you can take a couple $100,000 and put it into an index annuity that has an income rider where it'll guarantee double the income base over 10 years. Of course, that's 7.2%, but that's they're really heavily weighted on providing guaranteed income for people. But along the way, when you have these corrections like this, it's just, there's not a lot of room or places for you to just go to other than just cash.
Yeah, the financial
Except my
system is
husband's,
not.
which doesn't even allow that.
Oh my gosh.
And then we have the corporate bonds, which,
Yeah.
is not, but it's also funny to hear other advisors talk about the things that are being talked about right now, which is totally, 360 from what you guys, Jason, are saying. Stay away from corporate bonds, for example. So.
Well, yeah, I try to stay away as far as I can for most financial advisor advice. So,
well, here's the thing: is part of the reason I joined was because this the dialogue here and the research that you're doing, it would save me. Now, I probably spend 4 hours a day at different times, mostly at night, but the infusion of your information 10 to 12 hours a day is invaluable. And so, I'm actually advising people who are really concerned now what we should be looking for, and that's the U.S. Treasuries, and directing people in that regard, and looking for those options in whatever they have, if it's Fidelity or if it's TIAA-CREF, So hopefully the value that I bring to these people will be enhanced by helping them stay safe.
Yep.
So
that's great. That's very good.
So cool, Michael.
Yeah.
Today's trade's up 22% so far.
Yeah, I was gonna say, I think mine actually cracked 25%.
I always take the higher asking price just to be fair.
Absolutely.
Now,
what did you get it for, Jason?
920.
Yeah, I got it at 950.
Beat ya. Just kidding.
Yep. It's all right.
Yeah, we're going for bigger returns than.
Yeah, this is.
What'd you get in at, Gary?
915.
Oh, you devil, you.
I gotcha.
I'm glad to see our April call is out of the red.
Out of the woods. Yep.
Yeah.
This is going to be a nice slow grind. So the Feds, they got to raise money for a long time. So they need to be. If they rush us to zero right now, oh man, what are they going to do? They haven't even started raising the money yet. So we basically have the forward guidance. Now they need the fiscal. Then we need it to get passed through Congress. Then signed. And then we see the auctions. I believe these will dramatically increase. Now, in a normal world, the less credit worthy you are, interest rates go up, but we're not in a normal world. So they have to do the opposite, which is complete batshit crazy. But this bond bubble it's going to probably be what it's not going to end nicely. The temporary fix, I look at the 1965, 1980 period, runaway inflation, hiking of interest rates. But first we got to get out of the crisis. So my expectation is we're going to raise trillions of dollars to the Treasury. We're going to push rates negative. I think your 30-year could even go to negative territory, which I didn't think previously, but this is depressionary level economic consequences that are unfolding. There'll be a handful of companies that benefit. Most will be kept on life support. So I'm quite confident in our strategy. I like the risk management. I like having cash to get those, as Michael pointed out, those ETFs. And but patience, really got to be patient and smart. Ignore the noise, ignore SPY jumping up and down. Who cares about the SPY? You just think if business is slowed down, stocks aren't going to go up. That's an easy thing for people to comprehend. If the government has to raise money, they need to make it worthwhile for people to do so, and they control the interest rates. So that's what makes those bonds go up and down. Dollar's going to weaken the more money we print, so gold will go up. So really, I like our play. 40% TLT, 10% GDX with the married put, and then sit back and stay alive, isolate, don't get sick. Because this getting, my insider in the hospital system last week, he said it was looking like it was picking up. Today he called me and it's picking up, like huge pickup. So I'm afraid the scary part lays ahead. Mike B says, why do you use the TLT instead of TMF?
TMF's the triple leverage, Jay.
Yeah, I like the TLT, Mike. We have good returns. I'm not trying to have the best returns in the world. My goal is to deliver low volatility and to get the safest return. So if you can go make 100% this year, but you had to risk losing 10, 20, 30% to get there, I'll tell you, good job. Good for you, but you probably risked almost everything if you had been wrong. Okay, if you go through my track record, I have very low volatility and I still come out with gains. So in my pro track record, for example, currently, and there's some pretty crazy times. We had a crash in December. Probably a lot of people thought that was the start of an 08 style crash. We had 2019, which was a big bull market. And then we have 2020 where, can we start 2020 over again, please? I'd much rather be betting up on stocks and down on bonds. That's what I'd prefer. So track record speaks for itself. Biggest loss is 1%. We're not getting rich, but again, we're making sure we don't take on big risk. The amount of risk we have in our portfolio today is probably greater than we ever have had before because it's using all these call options, but we're still, even if TLT blew up, we still have limited risk in our total portfolio. But we are positioned to potentially have a double-digit return in March and April from these positions. So confidence is very high at this point.
TLT just clicked 6% up for the day.
Oh my gosh. What's our option at? What's it trading at now, Dean?
Everything I have is from today between 25 and 35% now. Profitable. From last Friday, we're clicking 60 to 70% profit. Everything's looking good.
I just hit 29 on this at the ask, not the bid. Let's see the bid. 1140. So if we'd use the bid a little less, 23. Yeah. Yep. So they don't want to rush the rates to zero. They want to, again, step one, you got to make the budget. They don't even have the budget. Step two, you got to get it passed, which I don't think will be a problem. Step three, you got to sign it. Step four, you got to roll out the auctions. Step five, we can then take the money and put it where it needs to be put to work. Step six, this investment must turn a profit for those who buy it, which is primary dealers, central banks. It's not many. You guys are some of the few who understand this. Okay, so this is a slow grind. They need to make this last. Now, what they don't want to do, the 30-year that we're trading has $800 billion kind of held hostage in it. Last thing the Fed needs is for that $800 billion to freak out and sell because yields start to spike. So I think it's just going to be as slow as possible grind up on the bonds and drop of the yields to get away with what they need to do. So that's great. If you get it, then it gives us more time. Imagine this had already dropped to 1 on that 30-year today. Well, then we wouldn't have the opportunity to build into this position all month. That would suck. And it would also ruin the whole point of this. The government needs to raise a lot of money to bail out private sector. So they haven't even started yet. we're still trying to wake up America that, hey guys, we got to get into isolation to protect the healthcare system from being a complete meltdown. We got to set up tents. Go watch documentaries 1918, 1920, Spanish flu. Okay, that's the magnitude of what we're facing here.
Got some more questions lining up.
Yeah, Jay, I was gonna say we probably have 5 to 10 more questions came in.
Okay. Okay, let's see. Jerry says, how about we just all get sick? 2 weeks of feeling bad, then it's over. Okay, so here's
UK calls that herd immunity.
yeah, Jerry, we don't want to do that. So here's the problem is we don't have okay, 80, here's the stats. 80% are at risk of being infected. 20% will need hospitalization. Who cares about mortality rates? People dying, that's actually not a problem, right? It's the people who need medical care that's really going to cost us money. So it's really the complication rate. So we have 100,000 ICU beds, 10,000 open, and we need more like a couple million. So we can't do that at once. So it's critical to the survival of our healthcare system that we all go hide in a hole and slow the spread so that we can slowly get sick and start building the infrastructure to handle the coming mass of sick people. That's absolutely critical for survival. The cost of that is it requires lockdowns, slowdowns, and the risk of economic collapse, starvation. So they're going to be walking a fine tightrope here where on one hand, we need to slow down the spread, but on the other hand, we need to not starve to death. So that's really the key thing there.
Do you have a question, Tom?
Yeah, I have a question. I had the TLT in one account and the protective put in another one, and the protective put got assigned. So now I'm flat. I'm plus in one and minus in the other, essentially flat. But so I bought I covered the put assignment, and now it's up $1. And I wondered what you would have done. Is that clear?
Yeah, I would keep my allocation to 40%. Sorry, guys, I should have made sure you guys knew to exit that put at the close. But it worked out to a pretty handsome gain, so good for you guys. 40% maximum exposure to TLT ETF. Now, again, if TLT goes up in value, it's going to obviously appreciate against our frame of reference, which is the value of the dollar. So we're not looking at the relative value of the dollar in this. So 40% position until I tell you to sell it, but realize that 40% is going to grow if our prediction's correct. So it's going to grow to greater than 40%. I wouldn't be having 60, 70, 80, 100% allocation to the TLT relative to my total portfolio. So if you doubled your position from that, I would take those profits and have smart risk management by not going over. Mike B, no offense taken, and sorry if we came across as snark about the triple leverage. I apologize. That was a good question.
Mark B, did you have a question?
Yeah, I do. Good morning. Thank you. I had to find the unmute button.
Nice.
During the 9/11/2001 period, when they did have to actually shut the market down because of, I guess, actual infrastructure problems with the explosions or whatever, what happens to options if they actually have to shut them down and the timing of them?
I don't know. I'll look into that.
Okay, thank you.
Dave.
Gary, all right, go ahead, Mark Stoley.
Hey. Yeah, I just saw an alert. The European Union proposes ban on non-essential travel to Europe. So they're basically saying we don't want anybody coming in from anywhere.
Yeah, this is the tip of the iceberg. All you have to do to have predicted all this was sit there and watch this unfold in China, which I did. And you wouldn't believe it. It looked like something out of a, from time to time, I would sit there and ask myself, is this some bullshit Hollywood propaganda, CIA stuff, or what on earth is going on? Because what they had to do to survive is nothing short of horrifying. So my family's pissed. I got them locked in the house. They don't understand what's going on. They're pissed at me. I've got them locked in the house for 40 days. In 40 days, all the idiots are going to get sick and they're going to be stuck in hospitals that are overran. And I think by then everybody's be wearing masks outside. We need a vaccine. So humans are on a race to get a vaccine to deal with this, which is at least a year out. So.
And Gary, did you have a question? Gary Martiner?
Yeah, real quick. Jason mentioned something about revamping the spreadsheet, sending out something simpler to work with last week or so. I don't know if I missed it or.
I haven't got it done yet. I apologize.
All right. Okay. Just want to double check because this is, kind of a big task for me doing spreadsheets.
Yeah. So
the more the better.
Okay. Yeah. Tuesday's really my free day. So Tuesday I'll try to get that done and get you guys a new sheet.
No problem. Great. Thanks. Appreciate it.
Jerry says, is the golf course safe? Yeah. So that's actually a good question. Outside is probably the safest place you could be. As far as I know, the virus is airborne, but it's so it's not just water molecules. It's literally floating in the air just from common breath, up to about 15 feet. But that's in a still room. So if you're outside, that's good. That's a good thing in terms of being safer. But I still wouldn't get too close to anybody.
Vitamin D is supposedly helping a lot.
So in the Spanish flu, the doctors found in 1918, they would take the sickest, and it was called outside therapy. This was probably the single most effective treatment they had. Fresh air, a little bit of sun, a little heat, and they're able to get critical patients to recover at a higher rate. I think they got the mortality rate from 40% to 14%, according to some of the scientists. So a little outside fresh air is good. A little sunlight's good. Not too much. You don't want to stress your body out, but let's see. Dave Anthony says, are brokerage accounts safe for storing cash? I would believe yes. If our financial system really goes down, then then the dollar's worth, then we're going to be nuclear war kind of Mad Max environment. I would have some cash in your safe, but I would avoid going to the bank now or ATMs. Imagine all the bugs and viruses all over that place. So.
Do you have a question, Ron?
All right. Has anyone paid for or made more than the course of costs of the course today? I have. Just wondering if anyone else has.
So have I.
Nice, Donald. How's your
times
game
over.
working today?
Excuse
20
me?
times over. I love it, Mark.
Murray has too. Murray has made more today too.
Nice. What are you up today, Murray?
I don't want to tell you. It's gigantic.
Over 100,000?
Yes.
All right. Love it,
Hey,
Murray.
Murray, that's nice. When you're up so much you're embarrassed to say, that's a damn good day.
Hey, Donald, what are you up for the day?
Nearly 70.
All right, baby. I love it. Love it. And look at this, guys. We're in the middle of the worst stock crash we've had in decades. And it's just music to our ears, guys, to hear, up 70,000, up well over 100,000. So cool. And I keep telling Jason, I wonder how many millions of dollars we've saved our customer base at this point, too. Crashes happen so quickly with the computers this time. It's just, I mean, wow, I don't know.
This is such a surreal crash to if you looked at any history of viruses, of things of this nature, it just would be so hard to make a prediction that this would have had this result. So everybody doing this, I just don't blame them if they just kept saying, this is bullshit, this is not real, it's not going to be a big deal. The only reason I was so convinced was because my whole theory going into the start of the year is that, well, first of all, I didn't think, as you guys know, I've been skeptical China would sign a trade deal. And there's a quote from President Xi that really, I just can't stop repeating in my head. And do you have that post handy, Ryan, the South Morning China Post about the long march?
I can find it real quick.
Come and pull this up, guys. This was really a telling moment. So we went through 2 years of, I mean, if you go back, really, this is a 30-year history leading up to this pivotal point. And I've always believed that the key to predicting the markets, the wild card, is understanding the relationship between US and China. And so China has been,
There's the link.
they've been buying out every politician on both sides of the aisle. So I'm not trying to blame it on one or the other. Okay, but they've been doing everything they can to their advantage. All right, fair enough. Including buying out as many people in our corporations and our politics as possible to create deals that are good for them. And all of a sudden, we come in here and start trying to bully China, putting up tariffs. They're putting tariffs right back. They're showing that they're not going to budge. And then lo and behold, out of nowhere, 2 years later, we got this trade deal. And everybody who was betting up was like, duh, of course we're going to have a trade deal, you idiot. Boy, did that turn sour quite quickly, huh? But here's what he said that will ring in my ears and I believe lead to something nobody wants, unfortunately. Okay. Xi Jinping calls for new long march in dramatic sign that China is preparing for protracted trade war. Xi Jinping told cheering crowds in Jingxi, we are now embarking on a new long march and we must start all over again. So that insinuates that they're prepared to decouple from the United States. We know that their big goal is to become the largest power, not the second largest power. They've stolen everything they need to do that. The seeds planted. They've known about this since November. They've been reporting bullshit, just utter bullshit since then. They hid this from their own people till January 21st. After it had been too late, they could have stopped the spread of this easily if they had gone public with it on the start of January or in December when they're signing this trade deal. Meanwhile, we have Russia clearly attacking the oil market. So without doubt, I believe this is a coordinated attack and that there will be a lot more trouble ahead. So that's my big picture view on this. But yeah, I was sitting
Jason,
there.
another thing that I've seen is that over the last couple of years, they've been systematically squeezing and pushing foreigners out. So where they used to welcome foreigners to come in to help increase industry or give advice or to negotiate between their factories and foreign factories and run conferences to facilitate that, they've gone from paying for the conference to making it very difficult to even allow the visas for the people to come in and do that. So they've really done an about face on international business being conducted inside of China.
Imagine if they refuse to turn back operations for Apple. Holy crap. I mean, Apple can go rebuild. They got plenty of money, but that's going to be a huge pain, a huge loss in the short term. Yeah, this all is adding up to be war, unfortunately.
Hey, Jason, I'm back, by the way. It was a false alarm.
Oh, good.
Can't make this stuff up. All right. In talking about, China specifically, I watched something last night. Michael Pillsbury. You familiar with him?
Is that from Agora?
He's from the Hudson Institute. He's
Oh,
Chinese.
yeah. I watched some of that stuff. Yep.
Yeah, I watched it last night carefully, listened to a lot of what he said, and they don't have the whole thing online yet, but part of it. He spoke about this, and I think what was interesting, there's a lot of things that, in a long discussion, getting peeled, just opening this onion, down to its core, there were some things in there I found extremely interesting with his analysis as it relates to all these administrations, because he's been in the middle of it all on consulting side on both sides. So
Let me see if it's the guy I think it is. But yeah, I've watched almost all those Hudson.
Yeah, well, he had an interview last night. It was on Fox, and it was Life, Liberty, and Levin with Mark Levin. It was one of those hour-long, of course, with commercials. But it was probably the most comprehensive interview regarding, and I picked up a few nuggets of information from him, which, have not been mentioned very, very much recently, and been frankly criticized because people really don't know the in-depth part of strategically how this thing has evolved over the decades, and this was, so I hope this, I think they got a bits and pieces of it. I think there's like 13 minutes of it on there right now. I don't even know. I haven't listened to the repeat, but this was an hour-long interview, of course, minus, whatever it is.
Send me the link. I'll get through that tomorrow. And
yeah, and but you'll have to watch it to see when they have 100% of this interview, because this is, because things that you and I might pick up, I don't think some of the others would pick up. You know what I mean? They don't hear all these little nuances that he has. It was fascinating. Anyway, yeah, that was one of the things. Also, I will tell you a quick story about what I heard this morning from a friend of mine in another state up north, but in the middle of the country. His spouse is in the hospital system in the nursing area, and apparently in January, a lot of the colleagues were ill. And they said they had all the symptoms in the chest, burning feeling in the chest and the whole bit, not in their head, all the stuff that we're talking about. They have not had the outbreak currently because they feel like a lot of them have already had it. So it's this thing's been, some people who are already in some of these hospital systems in other states feel like they've already been through some of this already, and they just didn't know what it was.
Yeah, this is gonna unfold very interesting.
Yep.
Anwar.
Yes, sir.
How's it going?
Not too bad. You?
Good. You get your TLT filled last week, I hope?
TLT.
40% position. You're up 6% today. Wow, that column is doing well today, huh?
Where is the TLT? 1 second. I have a call option on TLT.
Well, that's good.
It's up. That's it at 167.
Still not following the program all the way then.
No, because as I said before, my cash is, I sold everything at a big loss, and my cash is tied with many other small stocks that are as well in the red.
Yeah. And who's been telling you they're going to go farther down since you joined?
Yeah, I know, that's what I read in your email. Oh boy, but the GDX is down, and that's disappointing. I know that you didn't say to, not GDX, where is that? The GLD.
Mm-hmm.
I bought it at 158. What do you think I should do with that?
Well, I think you should follow the system as it's designed instead of so Anwar's been sort of taking bits and pieces of the program instead of following the full program. So it's hard to consult you when you don't follow the strategy. What I can do is compare what you've done compared to what we've recommended and show where you're lacking from the instructions, which we've done last week. So I think you're still at that same point where you haven't really followed the strategy.
But I recall you said to buy a call on GLD.
Sure, but it's part of a bigger picture, right? So we went through what you have done last week. So I would probably, if you want, we could do that same analysis. But it's going to be the same recommendation, which is to follow the program to the way everyone else is on the call.
But as I joined and I already have stocks, I don't see that I could follow your program to the letter because I didn't even study 100% what you were teaching, how to follow you to the letter.
Mm-hmm.
Maybe I should get out of your program.
Well, you'd be making a lot of money instead of losing a lot of money if you were following it.
Then maybe we have to spend some time on the phone with someone or yourself if you have time to tell me what to do.
Okay, so you should have 40% in the TLT. Let's do
my portfolio.
That's right. Yep, we've been telling you that for quite some time.
Yes, but to buy the stock. But altogether, I have lots of money in the stock, so I cannot just take 40% and put it in the TLT.
Right. So Anwar, I think when we talked, you said you're gonna sell $300,000 worth of positions. Did you ever do that?
I sold probably 500,000. I sold Baba. I sold Microsoft, and I sold another stock at a big loss, 50% loss.
Okay, so did you pick up 40% TLT in that capital? So 40% on $500,000 would be 200,000. Did you buy $200,000 worth of GLD at the time?
GLD, yeah.
Or I'm sorry, TLT.
I bought GLD. I spent on a 1,000 share, $158,000. Now I'm in the red.
Right. When did Anwar join? I just want to point out so Anwar joined. He's been kind of following the program, which I get. Maybe didn't trust it right away.
Yeah, my understanding is different. I joined the program. I cannot just drop everything else and follow the program because I was new. I don't mind follow your program. I would like to see some of your recommendations in green.
So
I
think you joined
we're seeing
around
GLD is $18,000 in the red.
Yeah.
Which was not our recommendation to ever buy the position.
Yeah.
TLT, however, was at 40% and GDX at 10% of the portfolio,
I wonder what happened to this darn thing.
plus all the calls.
I have one call on the TLT, 10 contracts.
So Anwar joined right about here, I believe.
3/6/2020.
Okay, so he joined right here when the SPY is at 294. And we instructed to sell all equities and to buy a 40% position in TLT. So let's just look at what happened since Anwar joined. SPY has dropped from 294 to 246, and I do believe that will get worse, way worse. So he would have saved a lot of money if he had listened to that advice. And you did, to a degree, you sold some. So the amount of money we've saved you from what you did sell in stocks would pay for the next 10 years of your subscription. So I feel like in general, at least you didn't lose as much as you would have. So that's one. Two, if he had followed the advice to buy the TLT at that time with half his
How much
money.
was TLT then when I joined?
Yeah, let's look.
Let me see how much it is now.
And then we told him to buy TLT on March 6th right here. So overall, I get it. Anwar didn't want to sell stock for a loss. He wanted to hold on to it and hope it would go back up.
But then I bite, how do you say it in the American way? Bite the bullet?
Yeah, I didn't want to bite the bullet.
I did at the end. And I sold. I lost $120,000, $130,000 at least.
Yeah. Well, I'm going to review the recommendation, and then we're actually 2 hours in, so I actually have to get some other work done. So here's what we're recommending. It's been the same the whole time. 40. Okay. You got it in your email too. 40% of your assets should be owning the TLT.
Is that what you want me to do now even?
Yeah, this is going to be the same for a long time, for the next year. Okay, 40% TLT, 10% GDX, and the rest is in cash. Let's just get to that point.
Why that much in cash?
Okay, so if you read the trailer, it says step one, don't hold. This has been the step one since February, actually. So I've been telling people this for a long time, not just this week, not just last week, not just the month before, but late January is when I started telling everyone. Indeed wasn't too happy with me because stocks were slowly going up. He's like, when are we going to get the SPY back? I told him after we crash. What did I tell you, Dean? When are we going to get back into SPY?
At least we'd start looking at 50% crash.
And Dean thought I was batshit crazy. He couldn't believe it. Now here we are. What are we now? 30% down. So I think more like 60 to 75% crash, guys. Okay, step one, do not hold any equities. We're waiting for the crash to go farther. Step two, hold all TLT calls, and we have you loaded up on TLT calls. We have 2 GLDs. Those are losing.
The price, you miswrite the price there. How much?
Okay, these have all been one option per 30,000 in cash.
Yeah, call, what's the call price?
Strike price.
Yeah, so yeah, I mean, Anwar, the problem is you're not following the program. Here's all the trades right here. These are up way more since I booked them. We're losing on our 2 GLD calls, and we're winning on all but one. Actually, I think we're now winning on all call options on TLT. So I'll update these.
All my TLT is rocking, Jay.
Yeah, but I think baby steps, Anwar. If you want to follow the program, oh God, yeah, 9% down again today. So I've been telling everybody don't own stocks since late January, and to buy the TLT. That's been the basic message, and it won't change. It's not going to change. What I think I'll do, Anwar, is I'm going to send you the recording where we went through what you're doing versus what we've recommended. And that advice still applies. So maybe let's review that. And then come on Wednesday, let's see where you're at, because it's still the same recommendation and you're still in the same spot, unfortunately. So you've not sold your equities, even though we've been telling you to, and you're not buying the TLT, even though we've been telling you.
I sold some.
Okay, well, that's good.
Yeah, I'm, let me see how much. As I said before, I lost lots. Now,
No, you saved lots. If you hadn't done it, you'd be losing a lot more.
Yeah, you would have lost another 150,000 today.
Yeah, so we've, just from what we saved Anwar on his equities, he's paid for 15 years of subscription. Just from that. That's how much we've saved you so far. And if this continues to crash, we'll be saving you a lot more than that.
but I still like to hear from you when you say hold all TLT calls, including 323. Also hold, sorry, GLD calls. But then if I am not in now, so maybe I should forget about this or buy TLT calls at a certain price. And my question is how much, if that's what you recommend.
Mm-hmm. Okay, so the recommendation currently is to have 40% of your assets in the TLT. I think that's a good first step for you.
Buy outright.
Correct. Yeah, that'd be my only goal, is to sell. I would look for the next time you see stocks up significantly, I would sell personally. I would be out of all equities, and I would have 40% of all assets in the TLT. I think that's a good starting point for you. Once we get to that point where you don't hold equities and you have 40% TLT position, I think it'll be easier for you to follow the rest of the program. The trade I gave today is already up a lot, but yeah, this one's skyrocketed. So this is the trade I gave you this morning when the TLT is at 158. And that's up a lot because now it's at 164.60. So what's the value of this? So the option recommendation today is currently at, and I do have, apologize. I can only go for about 2 hours per webinar before I do have to get other work done. But I do think you have the information you need to follow the program. It sounds like you just kind of don't, you're questioning whether you should or not. It doesn't seem like you don't understand what to do. It just seems like you don't want to do it. Does that seem correct, or do you really not know what to do?
Yeah, because I'm with other programs as well, and I am.
So let me ask you this: is the problem you're having with our service that you don't understand what to do, or is it that you just aren't doing it? Because that's.
I am.
I can't beg you to take the trades. I'm not going to, but I could tell you where you're not following it, which we did.
Okay, my portfolio is about $2 million, right? And your recommendations fine and dandy, but then I am not at the position right now to lose all that money, to liquidate everything and just buy, for example, TLT.
Well, how about this, Anwar? How about you put a
With
certain
the money
amount of
liquidated, right? With the money you've liquidated, Anwar, then maybe apply that to 40% TLT, 10% GDX, right? So if you've liquidated $500,000, your allocation would be 200,000 into TLT, right, and 50,000 into GDX.
But GDX went down quite a bit, so if I buy again, I'll be like the other stocks that I have; they are all in red.
Okay.
So
yeah,
can you give me some hope about GDX, or why?
Let's start. Here's what I want you to do, Anwar, because this is frustrating for both of us. Let's just try to follow the TLT trades. Okay, that's the core of our whole strategy, and you're not following it. So by Wednesday, I want you to be accurately following the TLT position, and then let's go from there, because that's the bulk of our whole system and where the profits are right now. Okay.
Okay. Let's say I'll buy 1,000 shares now.
Okay.
and then we'll go from there. And but
Okay, but you should have already done this. But yeah, I like that, and I think it's a smart play.
yeah, it's already $11 up.
Yeah. Yep.
And just Jason, real quick, just to reiterate, Anwar, and yes, it's up, really good today. It's up 7% here, but we do expect it to go much higher. So, and that's exactly why we have calls on it. And Jason, can't thank you enough, but I'm showing some massive gains on TLT in my portfolio right now. So thank you very much.
Yeah, today's trade's up 40% in 2 hours, so that's good. All right, guys, I'm afraid I do have to go. I appreciate everybody. We'll have our
Thank
next
you for your patience.
Yeah, no problem. Hey, Anwar, I understand. It's common that people don't want to take a loss. I think you're going to see some opportunity. I hope you get, so this is what I told you when we first met, is that I would expect there to be some bounces up in this SPY. And that's when I would 100% exit all equities, because I think you're going to absolutely get demolished if you don't. And I've been correct so far. So I've been saying to get out of equities since end of January. And I've continued to say that and have been long the TLT that entire time as well. So
One last question.
Sure.
PDX, they own it, right? But it went down. Should I keep it or sell it?
Okay, so let's just, again, if the instructions are confusing, that's one thing. But, if you want me to just give you a pat on the back. Okay, so my recommendation is have a 10% position in GDX.
Okay.
So that's my recommendation. So if it doesn't say to sell it, it means don't sell it.
All right. Got you.
Sometimes people need a little tough love, and I get it. You're in a lot of pain in your equity positions. We've been telling you to sell it the whole time. So that recommendation is still the same. The TLT GDX position is still the same, and it's not going to change. We're going to be holding these same two positions for probably 2 to 3 years. So, and the stocks I do want to buy are not Microsoft. Alibaba, yeah, I do like, but not until we've crashed way further. So I'll be getting you guys into healthcare, biotech, medical device, and e-commerce ETFs when I think we're near the bottom. So that's
All right.
always, I think we have a 75% stock crash. So, so yeah, it's the alert we gave you to sell your stocks. If I'm right and this continues to crash, saved you 15 years of subscription. So that's good. I'm glad that I can say and from that point of view, I did save you 15 years of subscription costs. If you had followed the whole thing, you'd have a really nice gain on the TLT too. So, but the good news is that this is just the very start of this expansion of the bond market. So the bond market's going to get a lot bigger.
I bought TLT and I bought GDX as we are talking.
Okay, good. So, now you're buying it up 7%. So there might be a little bit of volatility. You bought, so I'm typically, but yeah, that's how I want you positioned. So good. Sit back, relax, get the hell out of equities on the next bounce, and just follow it to the T. You can hear everybody saying they're making good money. So I think it's quite clear our program works when you don't.
Yeah, and Anwar, look, so Murray is in the webinar here. I think he has about 1.7 behind us, and he's up over $100,000 today.
On TLT?
Just on the total program, following every trade to the T.
Yeah. Yeah, so our biggest drawdown in history for a closed month is 1%. Okay, so you guys are, people like Anwar are having negative. This is what you're in, Anwar. Okay, so if you just trust the system and the advice, we've never had a month where we were down from start to end, the close of a greater loss than 1%. Now, in March, I had these guys up 15% and we're back to flat, but I'm still confident in the trade. So that's a bigger swing than typically we have. That's just because our call options, which had very little risk. So we got a jackpot on those call options, and I still think we have a jackpot on them. So Naomi has a question. That'll be the last question, and then we do have to wrap this up.
Thank you, sir.
You're welcome, Anwar. Thanks for being part of the program. We really appreciate your business. Sorry if I come across as a...
No, I want you to be hard with me. I want to learn as well.
Yeah, we're going to have to put your hands on the table. We're getting the ruler out. He's not doing his homework, folks.
Still, I'm long way to be on your program, but I am trying. I already did some transaction just now as we are speaking. More than what I told you. We'll see how it goes.
Okay, good for you. Let's go ahead and unmute Naomi. And then that will, Jose, do you have a last question?
No, I did not. Thank you for everything. I'm in the same boat. I haven't been following your program. I was on too vested on GDX, but now I'm back on the boat, trying to get this thing going.
Yeah.
Nice, Jose. Good work, bud.
So I've seen some people outperform me a little bit, like Mark, but he's not trying. The way Mark is outperforming is not by saying, oh, he's got 10% position in gold, I'm gonna go to 20. Now he's looking at where I have the focus of our portfolio and maybe adding a little extra risk where I'm putting the focus. And clearly the focus is in the bond market. So that's where you guys should pay attention. Do you want
I'm not able to get Naomi unmuted, so I'm not sure if she's there or not.
All right, well, let's wrap up. I got to get some other stuff done. Thank you guys. Really appreciate everybody. We'll be back on Wednesday. And yeah, so we're not going to be doing a whole lot, guys. It's going to be nice and easy, simple, very simple plan for a long time. So.
And Jason, just real quick, can you just cover the options for the people on trial that they have to get started with us?
Yeah, so if you have less than 30,000, this program, the buy and hold with no options, is a good bet for you. It's a 4 ETF portfolio, very simple. It's updated every Monday. And you do get to join this webinar. The basic program trades 3 times a week. It's good for portfolios between $30,000 and $75,000, sells for $2,000 a year. Great return. It's not as sophisticated as our Pro system. Pro system is very heavy on bonds. Even in a stock bull market, we're still going to have that bond exposure. So in a bear market, this portfolio kicks ass. This is really, if you have over 75, you really want to be here. There's a lot of advantages to owning the asset versus trading the options, especially as the options get more ridiculous because of implied volatility. So this program is what most of our members are on, because most of our members do have quite large portfolios. Again, our goal is low volatility with safe return. We're not trying to compete with anybody. Our goal is to look where's the least risk with a high probability return and protection of capital. So wealthier clients really like that package.
Jason, while you're on that too, Mike and Saldi wrote in, he said, between Friday's TLT and today's TLT calls, I have paid for more than the cost of the Pro program. Awesome, Michael. That's awesome. Love to hear it, Michael. And thank you so much for sending us that in.
I figured you'd want to know.
I appreciate it, Mike. Yeah, love hearing it. Love hearing it. So awesome job.
Very good, Mike. Very good. And the bonus we have, guys, is the education, which does have some, let's see, who's got that put option I gave you on the bonus? How much are we up on that QQQ?
It's bouncing between 200 and 350% today, Jason. Gain.
I thought it'd be up more than that by now. Okay.
Oh, that was earlier, actually. It's probably higher now. I'll have to go look.
Yeah, we're still floating around that. Yeah. Okay. So the boot camp's the bonus. It's every Tuesday, Thursday, you get content. Tuesday is just stuff you read and watch with every once in a while a bonus trade. Currently, we have a long time ago, we put a big bet on betting down on the stock market, which is paying off very well.
It's well over 400% now. Sorry,
cool.
I just got it.
So we're going for 10,000% on that one. But the real reason for the boot camp is for a lot of you, it's really, we got to understand how the hell the bond market works. It seems to be the weak link in most people's education. They got a lot of technical analysis. They know what companies they like. They know about charts and patterns and things of that nature, but they're weak in fundamental analysis and they're weak in the bond market. So that's where I try to focus a lot of our attention for the education. So that's every Tuesday, Thursday. It's a one-time investment of $10,000, but it's a lifetime membership, more access to me. And again, we are giving you a 30-day bonus in that to get your education up to par, no matter which package you initially join. So that's a little freebie we have for people who do upgrade their free trial. All right, Ryan, let's wrap it up. I do have to attend to some other matters. I appreciate everybody so much, and I can't wait to see everybody back on